Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you the ag outlook following the January reports that come from USDA. Now, as we look at these reports, the idea is that they provided us an update and the final numbers on the production from the 2022 crop, also while looking at potential changes that they did make to usage as we look forward for the rest of the marketing year, utilizing that crop, and what that might mean for plantings as we look forward into 2023. Now, in looking at USDA's numbers here, the idea is what we did see them do was make several adjustments to both supply and demand. Looking at corn specifically, what they ended up doing was they kept planted area the same, but ended up lowering harvested area by 1.6 million acres. So the drought not only impacted yields, but it also took out a few acres that farmers abandoned as they looked at really low yields, especially out in the southern and central plains. Now, with that reduction in acreage, actually the national yield did come up because we weren't harvesting those low yielding pieces of land out there. And so they bumped the yield up by a bushel per acre to 173.3 bushels per acre for the nationwide average. But when it was all said and done, that meant a lowering of production by about 200 million bushels. And that was the big, if you will, news story that helped push prices higher at the end of last week, looking back there at January 12th and 13th. Now, so supplies shrunk. How about demand? Well, as you look here in the gray box, what we saw them do for 2022 is we saw them lower feed and residual demand by 25 million bushels. We saw them lower the food, seed, and other industrial usage down there by 10 million bushels. But the biggest cut came in exports that they took out 150 million bushels out of. And so when you add those all together, that's dropping that 185 million bushels. So that meant supplies dropped faster than usage. Ending stocks had to adjust downward. They did by 15 million bushels. Now, even though the stocks are tightening, USDA held firm with their season average price of $6.70 a bushel. So those were the updates that they gave us on the corn market for the 2022 crop. Now, USDA will not start adjusting their 2023 outlook until we get into April and May. So what this adds in there is that as we're looking forward, I think it makes the case for that growth in corn plantings as we look out there because of the strong prices going up to 92 million acres. But what it also means is that we would likely see USDA downgrade some of the demand as we look in the gray box there as well. And so I think that's the challenge here. Short term, what we got from the reports was some positive news that added to the price, but longer term, we do have to worry about demand slowing down, especially if we do get a bounce back crop next year. Now, looking at the soybean crop, we saw some very similar moves there. Again, planted acreage for 2022, they held constant, but they lowered harvested area by 300,000 acres. Now, in this case, they also lowered the yield, as we're looking there, by 7/10 of a bushel. So it's sort of a double whammy on production. It ended up lowering production by about 70 million bushels. So we saw that drop. But again, usage also got downgraded a little bit there. The big moves that we saw were a 4 million bushel cut as we look at seed and residual. But again, the big one was exports, where they took that down 55 million bushels. So again, you add it together, and that meant that we were shrinking ending stocks by roughly 10 million bushels, knocking us down to 210 million as we look out there. So again, this market remains very tight. And they ended up adding 20 cents to the season average price down there, so bumping up to $14.20. Now, looking forward, USDA has acreage falling in 2023 just slightly. I'm going to argue, given the strength in pricing, I do expect that acreage to go up, probably in the 89 million acre range. But that'll be one of the big wild cards we'll look for when we get to the March planting intentions report as we look out there. But it's the same sort of issue. Short term, supplies remain tight, supporting nearby prices. But as we look at next year's crop and the bounce back potential in production, we do have to worry about that usage being able to rebound as well. Now, as far as the yield numbers were concerned, again, they did bring the U.S. corn yield up a bit, but for Iowa, they actually knocked us down another couple of bushels. So we averaged a around 200 bushels per acre, down about 4 bushels compared to last year. But as you can see, places like Minnesota and Illinois also had record yields this year. So we did see some stronger yields, but that drought really didn't impact as you especially look from Nebraska down to Texas and throughout the Southeast. Now, looking at soybean yields, sort of similar tale, except, if you will, even more of a downward punch as we look at yields across the countryside. Here in Iowa, we did see them knock us down about another half bushel. So we're down roughly 4.5 bushels compared to last year. We did see some stronger yields a little north of us, and we did see some record yields down along the southern part of the Mississippi River Valley. And that's the area I'm going to watch in this coming spring for additional soybean plantings as we look out there. Now, in terms of the worldwide picture, most of the adjustment was here within the US. We did see some small cuts in other places, especially in Argentina and Brazil, as they continue to deal with drought problems there as well. But you'll also notice we did see that Chinese crop start, is looking a bit better and add back some additional bushels there. What this is indicating is that, yeah, the world corn market is also tight, but we do see, let's call it relatively more corn out in the rest of the world that's leading to some export competition as we look out there for U.S. corn, especially not just corn, but I want you to think about world wheat is also competing with U.S. corn in those export markets for that feed demand in the international marketplace. Now, as we look at soybeans, the idea is we did see the U.S. and non-US supplies both shift downward here. The biggest cut was actually happening in Argentina as you look out there, but we did see some growth again, Brazil in this case, and China. But the idea is overall world soybean supplies continue to rise, but luckily demand for soybeans continues to sort of match that pace, and that's what's helping support soybean prices here over the past year or two, and arguably looking to continue to support it as we look forward into 2023. Now, as far as that export pace is concerned, right now the soybean story is pretty good. We continue to see sales running just ahead of last year's pace and just ahead of the 5-year average. But given USDA's latest update, what they're saying is by the end of the marketing year, we will fall not only below last year's pace, but below the 5-year average. And so they are expecting to see some additional cuts here. The market to watch, of course, is China. China thus far has been positive for us. They're up about 10% compared to last year. But the worries are that as COVID has enveloped that country there, we could see some additional slowdown shutdowns because of that, and that could limit additional soybean sales as we look deeper in the marketing year. On the other hand, the corn market has struggled as far as export potential is concerned. As you can see, we're running well behind last year and even well behind the 5-year average. And USDA's update says that we'll remain below average as we finish out the year. The big cuts have basically been everywhere. It's, small markets and big markets have both pulled back. So we're seeing less corn sales into Mexico and China and Japan and Taiwan and on down the list. It's hard to find a market right now where we've seen some additional growth on the corn export side. And I think that's going to be the major challenge as we look forward for the 2023 crop is where would we get that bounce back in international demand? Now, when it comes to feed demand, the idea is the picture is getting hopefully a little better as we look out there, but it's still a challenging picture as the beef industry has continued to shrink, but that shrinkage, if you will, has, started to slow down. USDA originally had been projecting beef production to be down by 2 billion pounds as we look here in 2023. Now they're saying more like 1.85, 1.86 billion pounds. So it's still shrinking, but not as much as originally estimated. Along with that, we continue to see some growth as we look out there in the pork and in the bird industries. But it's just not enough growth to really bring our feed demand back up to where it had been for the 2020 and 2021 crops. Now, as far as ethanol is concerned, we've seen, let's call it, for the most part, a good pattern over the past year or so. But for the last few weeks, we have seen some struggles within the industry. The gasoline and ethanol markets have been more volatile here within the past 6 months than they were, say, pre COVID. And so, as we're looking at the corn grind for ethanol right now, it is down a little bit compared to last year, but there's reasons to believe it will bounce back as we look forward in 2023, especially as we continue to see more and more people driving for both work and pleasure. And so, as we look at where prices settled out at the end of the week last week, what we see is that we have very strong pricing to finish out the old crop, the 2022 crop year, holding prices there in that 650 range as we look to finish the year. Now, as we look at new crop pricing for the crop that will be planted this spring, we do see a step down, but we are still maintaining prices nearly at $6 as we look out there. And in fact, futures pointing to a season average price of $5.85 as it sort of builds in a little bit of a risk premium here compared to where USDA might be standing because of the ongoing drought conditions and concerns about, let's just call it, more extreme weather looking forward. Now, looking at the soybean market, similar tale. We've got very strong pricing for old crop prices out there, with basically futures hanging out over $15 until we get into this summer. Then we start to see that fall off. And then, as we look deeper into the 2023 cropping year, we do see prices approaching 1350, 1375, still at profitable levels, but you can see that profit margin for both corn and soybeans tightening as we look out there into the 2023 crop. So with that, that's a very quick update on what we saw from the USDA reports here in January and the market reaction to those reports. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. I want to thank you for tuning in and watching these videos and hope that you have a wonderful and productive 2023.